Welcome back to the Money and Wealth Show. I'm Sterling Fox in conversation this week with David Morgan, international silver analyst, just back to North America after a tour of Asia. And David, over there, if I'm not mistaken, the government of China, for example, is encouraging its citizens to acquire physical gold and silver. What sort of appetite did you perceive from visiting Asia and running up against these people?
Well, they're pretty tuned into the gold story, and the government acting as if they should buy it is true, but probably not to the level that it's on the internet. I mean, I want to be very clear here. What happened was there was a bullion dealer that was on a government TV show, and that kind of lighted the fire that is pervasive throughout the country. It's really not,
okay.
But certainly there is encouragement. They're not discouraging investment. The silver story is not really that well known over there. Singapore, for example, has a huge GST tax on silver, but there's none on gold. What I find fascinating is, looking at the silver side of the equation for precious metals, is that you can buy gold almost anywhere in the world pretty easily. Mm-hmm. But when you go to buy silver, especially under the old British Empire, if you will, it's almost impossible and discouraged. I mean, why would you put this huge tax on it? But it is. It's very difficult to get silver in most of the Asian countries. Even in China, most of the silver that's bought is paper silver. When you go into the bank to buy silver, you're going to get a certificate, which is, of course, contrary to what I teach initially. I mean, I don't mind if you're using that as like your third or fourth silver investment, but your primary silver investment should be the real metal first. It's really difficult to get the real metal first, as we talked about in the last segment. Mm-hmm. There really isn't as much silver as you're led to believe. I mean, if you listen to the bearish side of the silver story, it's just very plentiful. The facts are it isn't. So since the cover ratio is so large, meaning there's a lot of paper silver and paper gold relative to the physical reality, I think a day of reckoning is just ahead.
Now, you opened the door to this in our last segment, too. You're talking about, troubled times, to be nice about it. You were trying to be nice at the time, as I recall. But we've got currency, we've got the euro and Greece and all of that going on. The American dollar is iffy. The loonie is at par with the greenback. There's all these currency fluctuations. And it would seem in times like this that some people are seeking the safety of gold and silver as a way of just not dealing with shaky currencies, regardless of where on the planet they may be.
Well, I think you absolutely summarized the conditions of the financial system on a global basis. We're in trying times right now, and at these junctures of these great inflations, when they start to get to the end, what you see is increased volatility throughout the entire sector. When you see one currency move against another in a day what used to take a year, and that's a very good example. What you're finding is uncertainty, because volatility means uncertainty, and that's what we have. So what looks good on Tuesday doesn't look good next Tuesday. And now with everybody having an internet connection and be able to trade over the wire, you see huge masses of money moving in and out of different sectors very, very rapidly. And these are people that can't make up their mind. But some people come to the conclusion or to the sudden realization that, an ounce of gold is a pretty stable thing. What changes is the amount of paper in whatever currency versus that piece of gold.
Right.
And silver's the same story. The thing about silver that I think makes it a little bit different than gold is that actually at this time, I believe, is going to serve a slightly different purpose.
How so?
Well, gold has always preserved your wealth. I mean, the story being, as we've heard thousands of times, that an ounce of gold will buy you a fine man's suit and shoes and everything in the 1800s or the 1900s or the 2000s. So its purchasing power stays put.
Right.
And that's basically true. Gold is there to preserve your wealth. So if you own gold, you're not going to lose. And at certain times you can actually, make some money. Silver, though, I think can make you wealthy. And the reason I say that is because the dynamics for silver have never been better. If you go back even to the last bull cycle in the 70s, what you find is that silver was used as a substitute for gold. And when things really started moving in the gold market, the little guy that was late to the party, so to speak, really couldn't afford gold. So they jumped on the silver story. That'll happen again. But this time, there's so much used in industry that wasn't used last time. I mean, back in the 70s, you didn't have the internet. You didn't have laptop computers. You didn't have, cell phones. You didn't have microwave ovens. All these things that use a little bit of silver times millions and millions and millions of applications that exist didn't exist back then. So you got to look at it from a perspective of factual information.
From the average investor, individual, unsophisticated investor looking for some something solid in which to put his or her dollars, silver's pretty darn attractive, I should think, Dave.
Well, absolutely. And I want to make a comment on that because way back, about 10 years ago, I was asked to write the investing rules, the 10 rules of silver investing, which you can actually get for free on my website.
Right.
And I wrote the #1 rule that silver is the money of last resort. Now, most people have heard again and again that gold is the money of last resort, and gold is the only asset that isn't simultaneously someone else's liability. Well, that's really not true. Silver could be that. Lumber that's paid for could. So could wheat if it was fully owned. But back on point, silver is the money of last resort because let's face it, let's do a thought experiment and say that there is a financial collapse. And you've got to go feed your family and put gas in your car. Are you going to take a gold Krugerrand, 1 ounce of gold worth $1,100 to buy groceries?
Not likely.
Not likely. But are you going to take some silver dimes from Canada back when they were silver in and buy bread and groceries? Sure, you could do that. So it is the money of last resort. Now, I'm not saying that there's going to be a financial collapse. What I am saying is that the merchant money, the money that has changed hands throughout history, has always been silver, not gold. Silver is the money of history, not gold. Gold has been the money of nation state to nation state or large transactions, and that's a fact. But the amount of silver that is placed in each other's hands worldwide basis far exceeds the amount of gold that's ever changed hands.
Our guest this week is silver analyst David Morgan, and you can find his material on his website, themorganreport.com. Lots more to come. Stay with us.
Good afternoon. My name is Larry Ray. I'm the president and CEO of Gold Ray Resources Corp., a company that trades on the TSX Venture Exchange and has the majority of its operations in China. We are currently developing a resource there with limited production at this time. Our goal is to increase this production up to about 1,200 to 1,500 tons per day. And to do that, we are negotiating with several Chinese companies, one of which will become our partner either directly into the company or into the project, which will allow us to move the project up to the desired tonnage. For further information, please visit our website at goldray.com or phone 604-531-9639.